Hello and welcome to this video. In this video, we are going to do a A-level question from paper 4, Feb-March 2023, question 2. The question states that Simran is a manufacturer who uses activity-based costing ABC. She provides the following information for a year about the two products which she manufactures, product A and product B. Units produced and sold are 2,500 and 4,600. Units written are 500 and 600. Selling price per unit is $50 and $72. Direct material per unit is 1.5 kilos at the rate of $8.20 per kilo and 3.5 kilos at the rate of $9.50 per kilo. Direct labor per unit is 2 hours at the rate of $10 per hour and 2.5 hours at the rate of 12 per hour. Information about the production overheads was as follows. Overheads, total annual cost in dollars. Machine setups, $4,480. Machines are set up 80 times for product A and 200 times for product B. Quality inspections, $8,000. There are 40 inspections for product A and 60 for product B. Order processing, $5,500. 190 orders for product A and 360 orders for product B are processed. Depreciation of machinery, $15,200. The net book value of machinery used for product A is $45,000 and for product B is $55,000. The units which were returned were all found to be faulty and could only be sold for their scrap value of $8 per unit. In the A-bit of the question, we are asked to state what is meant by the term cost driver. You see, cost driver is the main reason why a cost have occurred. Like we have machine setup cost because we have set up machine for many number of times for product A and for product B. The cost occurred, hence this is a cost driver. Or we have quality inspection cost. We have inspected the quality many number of times for product A and product B, and because of this we have faced a cost to pay, and that cost is called as a cost driver. Or the order processing cost, we have ordered many number of times for product A and for product B, and because of this the cost have occurred, hence this is a cost driver. Therefore, cost driver, the activity which directly causes the cost to be incurred in the production process, is the cost driver. In the B bit of the question, we are asked to calculate the total profit or loss made from the production of each product for a year. So for total profit, what we will do is we'll take the total revenue, from there we subtract the total cost. So we'll do all the calculations in our working notes. We will start with the net revenue. How do we get the net revenue? We'll take the total units which have been sold and multiply it with the selling price. However, here we have certain units which have been returned after sale, so we have to subtract them. So for product A, we'll take 2,500 units which were sold, and from there we subtract the units which have been returned, which are 500. So we'll get the units as 2,000, and then we'll multiply it with $50. We'll get the value as $100,000. And for product B, it will be 4,600 minus 600 times 72, and the value will be $288,000. Then this units which have been written will have a scrap value of $8. So for product A, it will be 500 times 8, which will be $4,000, and for product B, it will be 600 times 8, which will be $4,800. Next, we will calculate the total cost, for which we will start with the direct materials, which we will calculate by the number of units produced times the number of kilos the material is used times the rate at which we have purchased this material. So for product A, we have produced 2,500 units and we require 1.5 kilos of material for each product, and the rate is $8.20. So we'll get the value as $30,750. For product B, it is 4,600 units times 3.5 times $9.50, which is equal to $152,950. Then we have direct labors, where we will take the number of units produced, multiply it with the number of hours of work which is required to produce one product, and then the wage rate or the labor rate which we are paying per hour. So we'll take product A, we have 2,500 times 2 times 10, which will be $50,000. For product B, it is we have produced 4,600 units and the number of labor hours which are required to produce 1 unit is 2.5 hours. So we will multiply with this, and then the wage rate is $12 per hour. So we multiply this, we'll get the value as $138,000. Now as we are done with all the direct costs, we will go for the overhead cost. In activity based costing, the overheads are apportioned on the basis of cost drivers. These are the activity which led to the cost, and we have 4 activities here, that is machine setup, quality inspection, order processing and depreciation. And we have a formula to calculate the cost driver rate, which is the cost pool value, that is the total costs which have been incurred because of this activity by the number of uses of the cost driver. So for this, if we start with machine setup rate, the total cost which was given was $4,480, and for product A we require to set up the machinery 80 times, and for product B we require it for 200 times. So this will be the total, that is 80 plus 200 will be 280. So 4,480 divided by 280, we get the value as $16 per time, that is for one machine setup we require $16. So for product A we require to set up machinery 80 times, so 80 times 16 will be 1,280, and for B it will be 200 times 16, which will be 3,200. The quality inspection rate is, the total is given as $8,000, and the amount of quality inspection required for product A is 40 and for B is 60. So 8,000 divided by 100 will be 80 per inspection. For product A we require 40 inspections, and per inspection we require to pay $80. So 40 times 80 will be 3,200. For product B it will be 60 times 80, which will be $4,800. For order processing, the amount was 5,500. We order for product A 190 times, for product B 360 times, so this will be 550. So 5,500 divided by 550 will be $10 per order. So for product A 190 times we have ordered, times 10, which will be 1,900. For product B it will be 360 times 10, which will be 3,600. Depreciation rate, we have been given the total depreciation is $15,200, and for product A the machine was cost as $45,000, and for B it is $55,000. So when we calculate this, we get the depreciation rate as $0.152. So for product A it will be, the net book value of machine was 45,000 times 0.152, will get the value as $6,840, and for product B it will be 55,000 times 0.152, will get the value as $8,360. So with this we are done with all the calculations. Now let's calculate the total profit or loss. We'll start with product A and product B, and we have the net revenues, which was 100,000, which we calculated for product A, and 288,000 for product B. Then we will add the scrap value, which we got 4,000 for product A and 4,800 for product B. From there we'll subtract the total cost, for which we'll start with the direct material, which is 30,750, which we will subtract, and 152,950 for product B, which we will subtract. Then the direct labor, which we will subtract as 50,000 for product A and 138,000 for product B. Then the machine setup cost, which we will subtract as 1,280 for product A and 3,200 for product B. Then the quality inspection cost, which we will subtract as 3,200 for product A and 4,800 for product B. The order processing cost, which we will subtract as 1,900 for product A and 3,600 for product B. The depreciation cost, which we will subtract as 6,840 for product A and 8,360 for product B. So when we add the net revenue plus scrap value and subtract all the cost, we get the profit for product A as $10,030 and a loss for product B as $18,110. Furthermore, additional information is provided which states that Simran was concerned about the high volume of units being returned. She believed that the workers were not paying enough attention when assembling the products. She considered installing a system of surveillance camera in the factory so that the workers would be monitored. She believed that this would totally eliminate the returns. Simran would rent the camera system for a fixed period of 3 years. The cost of renting and monitoring the camera would amount to 18,000 per annum. Simran decided that this would be added to the cost of quality inspections. The increased total would then be allocated on the basis as before. In the C bit of the question, we are asked to calculate the revised total profit or loss made from the production of each product for a year if the surveillance camera were introduced and all the returns were eliminated. Let's do the calculation in the working notes. In this, we have no returns at all because all the returns are eliminated. So our net revenue will be units sold times selling price. For product A, it will be 2,500 times 50, which will be $125,000. For product B, it will be 4,600 times 72, which will be $331,200. The quality inspection rate will change because we are adding this cost of 18,000 to the quality inspection. So 8,000 was previously the cost for our quality inspection plus 18,000 divided by 40 plus 60. So we'll get the value as $260 per inspection. For product A, we require 40 inspections, so 40 times 260 will be $10,400, and for product B it will be 60 times 260, which will be $15,600. Now let's calculate the revised profit or loss. We'll start with the net revenue, which we have calculated for product A as $125,000 and for product B it is $331,200. We don't have a scrap value as we have eliminated the return, so we'll go to the cost where we have the direct material, which is same as previous value, that is $30,750 and $152,950. Direct labor will be $50,000 and $138,000. The machine setup cost is $1,280 and $3,200. The quality inspection cost have changed because we have added the cost of surveillance camera, and we have already calculated this in our working notes. And for product A it is $10,400 as revised cost, and for product B it is $15,600. Then we have the order processing cost of $1,900 and $3,600, and we have the depreciation cost of $6,840 and $8,360. Now when we take the net revenue and from there if we subtract all the cost, we get the revised profit for product A as $23,830 and for product B as $9,490. In the debate of the question, we are asked to advise Simran whether or not she should install the system of surveillance camera, and we have to justify our answer. I would advise Simran to install the system of surveillance camera because when they install the surveillance camera and if there are no returns of the product, then the product B will make a profit of $9,490, whereas when there was no surveillance camera and the products were returned, then the product B was making a loss of $18,110. So this will help them to increase the overall profit of the business, and when the workers are monitored, they will work harder and they will be more efficient. This will increase the profitability of the business and hence reduce the labor cost. Furthermore, this will also improve the customer and business relationship. Why? Because now the customers are getting the product of good quality, and when they are getting the product of good quality, there won't be any returns, and this will improve the brand image of the business. However, Simran has to make sure that the returns are not due to the faulty components, but I don't think so because there was already a system of quality inspection even before the installation of the system of surveillance. So I don't think the returns was due to the faulty components. However, this will further increase the cost of production by $18,000, which they have to pay for renting the surveillance camera, training and maintenance. So I would suggest that Simran should buy the cameras instead of renting them, which will be more beneficial for her in long run. Thus, I advise Simran that she should install the system of surveillance camera, which will be more beneficial for her. In the E bit of the question, we are asked to comment on the suitability of the cost driver to account for the cost of surveillance camera. You see here we have taken the cost driver to which we have added the cost of surveillance camera was the quality inspection. And I don't think this is a suitable cost driver, because it would have been better if they have taken the number of workers or the total labor hours as the cost driver, because here we are monitoring the workers. So this would be a better option for the cost driver. However, it does not make any difference on the profit of the business, because the total cost will make the difference. If the cost exceeds 18,000, then it may have an effect on the profitability of the business. However, if we are choosing any cost driver and apportioning the cost, this will not affect the overall profitability of the business. Hence, they can take the cost driver as quality inspection, but the better cost driver might be the number of workers or the total labor hours. So, this is what I suggest. With this, we have completed this question. Thanks for watching my videos. Have a peaceful and blessed life.